Yeah, it's not yet, in our mind, time to rotate into values sectors in the market. The big thing that we're looking at is the coronavirus trials. We saw a confirmation that the AstraZeneca Oxford trial in the US, which was stalled for a couple of days, that now has gotten underway on the last day of August. Progress towards the successful outcome from one of the three major coronavirus trials, that in our mind is really the next catalyst to watch. And we just don't know. We don't know which way it could go. Certainly we're positive. We hope that we will see some positive outcomes from these trials and the FDA will accelerate approval for a coronavirus vaccine. But we just don't know for sure. But that's the one thing that could lead to a switch. If all the ducks line up, we get positive outcome from the trials, the FDA agrees to fast track approval, then that will lead to greater optimism on economic opening into later this year in 2021. And that could act as the shift towards value sectors in the market.
Okay, so you want to see some material improvement on the vaccine front. I mean, a lot of others are saying, look at what's happening with the fatality rates improving, look at what's happening with cases because more of them are asymptomatic. But for you, you need to see more progress, it sounds like.
It definitely, if you look at the numbers in terms of people returning to the office in New York or in London, we're still in the high teens, low 20s. If you look at airline capacity, the number of scheduled flights in the US compared to a year ago, we're still running at 30% for domestic flights. So while the news in terms of fatalities is certainly positive, it's not leading to a rush back into the skies, more tourists, or a rush back into city centers.
Fair enough.
Clive, you say the U.S. election is a risk to the markets. Does that mean that you'll be looking to take some money off the table ahead of that?
It definitely is. It's the key risk on the horizon. And what we're focused on is that if we were to see Trump begin to stall in the polls, we have seen his numbers recover in recent 10 days. But if we were to see that stall, then I would be concerned that we could see Trump lash out, specifically at China, and that could result in a setback for the market. Is it sufficient for us to recommend reducing allocation to equities? No, it's not. For shorter-term investors, it's certainly a concern, but in the bigger scheme of things, we don't think either a Republican or a change towards having a Democrat in the White House really alters things fundamentally for the U.S. economy. It definitely shifts things in terms of politics, but for the underlying economy, it's the coronavirus and the vaccine that matters.